thank you so much for having me. I'm going to spend a few minutes with you guys today telling you a little bit about Bank Mobile, why we came into existence, what problem are we solving for, and what strategy are we implementing to really solve that problem. And then maybe ending with a few thoughts on how I think, based on our experience, how banks should be responding to players like us coming into the space. So today, Bank Mobile is one of the largest and fastest growing digital banks in the country. With 2 million accounts, we are in the top 15 banks in the country already in terms of number of consumer checking accounts. I'm very proud to say that we were also the winner of the most innovative bank in 2019 at the Lendit conference that took place just a few months ago. And it's really because we are focused on delivering digital banking solutions that are modern, that have high product design, and really go after the customer pain points that we're solving for. And we deliver this today through a unique B2B2C strategy, which I will share with you guys more about. So the problem that we're solving, it's pretty amazing that a third of Americans today are living paycheck to paycheck. And almost 50% of Americans don't even have enough to pay for a $400 emergency if that ever happens. And 50% of Americans are saving less than 5%. And these same Americans are being charged $34 billion a year in just overdraft fees. So it is very clear that there's a very large demographic of Americans today that are looking for an affordable alternative banking solution. Additionally, it's very clear that consumer needs and behaviors have rapidly been changing as it relates to their banking experience, and that banks have been slow to adapt to these changes. For example, Americans on average are walking into a bank branch one time a year versus interacting with their bank on their mobile device 20 to 30 times a month. We're also seeing that consumers are completely frustrated with minimum balance requirements, with fees, etc., with 48% of Americans switching banks indicating that the reason that they switched was because they were tired of the fees. We also have millennials like myself and even younger generations than us that were really digital natives in the environments that we grew up in. And they're frustrated by the experience, and about a third of millennials are looking to switch banks in the next 90 days. And so it's not just from a customer experience standpoint where banking is not delivering, but also from a business model front, there's so much to be improved upon. Today, still today, bank branches are the main customer acquisition vehicle that banks use, and it's a very inefficient strategy. The reality is that bank branches open one net new checking account per branch per week, so 52 net checking accounts per branch annually. Today, utilizing technology and with 0 branches, we're able to open about 10,000 accounts a week. So that's a lot different of a delivery model for acquisition. And I'd be happy to speak more about how we're doing that. So overall, our premise was that there's a better way to do banking than exists today. That one that's centered on solving consumer pain points around affordability, transparency, creating more consumer-friendly products, being technology and modern, customer-centric product design driven. Additionally, that there's a different model for customer acquisition that can focus on high volume, low cost customer acquisition, and that we can deliver this with a growth model and a net income model that is at least equal to traditional banks, if not better. So that's what we've set out to do. And this is a brief introduction to Bank Mobile. Short video. So today, we focus on a few guiding principles that we always keep in mind. One is to keep it simple. There's enough complexity when it comes to banking, and we want to be the antidote to that. Two, we focus on customer experience in terms of customer service as well, and user experience, because we know at the end of the day, even though this is a tech-driven product, technology can be commoditized, and we need to stand apart above and beyond just technology. Third, we speak with an authentic voice. You know, there's enough distrust that exists, and we really came into being because we wanted to partner with our customers and truly be a customer-centric company. And that is something that we've prided ourselves on since the beginning. And lastly, we are a bank, but first and foremost, we're a technology company. And so we make sure that we have an organizational structure that's focused on an agile work process where we're iterating very quickly on product design, on product features, make sure that it resonates with the customer, and if not, we're back on our sprints and making sure that we're very focused on being able to iterate quickly. So how did we get to where we are today? What is our B2B2C strategy? Well, traditionally, you could think of B2B2C as bank, to branch to consumer. Our model of B2B2C is bank through business partner or distribution partner to consumer. And through this model, we are able to acquire customers at less than $10 versus traditional banks that are more in the $300 to $500 range. And as I mentioned before, we're also opening about 10,000 accounts a week. And today, our B2B2C model is really driven in two areas, the higher education space, as well as in telecom through our relationship with T-Mobile. So in the higher education space, we have relationships with about 800 campuses across the country. And we help solve a pain point for them, which is delivering payments between themselves and the students that they serve. And 1 in every 3 college-bound students goes to one of these 800 schools, which is a huge brand equity play for us as well. And today, about 300,000 of these students each year choose to receive these payments from the school in a bank mobile account. And so it's a huge customer acquisition strategy for us where the schools actually pay us for providing a service to them, and in return, we create a market for us to be able to serve. And this is, for many of them, their first bank account, and we can truly provide them with such a compelling experience. And our strategy is to create a customer-for-life strategy where we offer them checking and saving while they're students, and expand into a multitude of different credit products as they graduate so we can grow with them. And today, a lot of the products that we offer, we do in partnerships with other fintechs, because I think that there's world-class partners to be a part of delivering our strategy. And today, Upstart and LendKey are 2 key partners in this space. In telecom, we are always sort of known as bank mobile disruptor in banking. And T-Mobile has always been a disruptor in wireless, where their whole strategy is about being the Un-carrier. And so we've joined forces together to continue to innovate and solve consumer pain points around the mobile experience. And so back in April of this year, we launched T-Mobile Money, which is a checking account product that really serves and solves for the most common pain points of the T-Mobile demographic. People getting charged with fees, minimum balance requirements, not being paid on their money, not having access to their money. And the way that we solve that today is 4% interest on the account for balances up to $3,000. We have free overdraft protection. We have no monthly fees, etc. And so that's been launched in April, and we consider it to be the most successful de novo digital bank launch in history. So we're really excited about the volume and excitement that we've gotten around this product. And this is introducing the T-Mobile product.
When it comes to banking, the struggle is real. You find yourself here, or here. You definitely don't want to be here. Banks want to keep you as a customer, so your money can make money for them, with shamefully low interest rates, and an average of $130 in fees per customer every year. You'd think there's got to be a better way, right? Well, we heard you. Introducing T-Mobile Money. Not another bank, a better one, where your money is safe, secure, and FDIC insured, with insanely high interest rates, which only get better for T-Mobile wireless customers. T-Mobile Money has no account, minimum balance, or overdraft fees. Oh, and here's more for you. Our network has more no-fee ATMs than Bank of America, Wells Fargo, or Chase worldwide. setup is simple, all done on the T-Mobile Money app or tmobilemoney.com. And of course, anytime you need us, we're here for you. 24/7, 365. T-Mobile Money. Not another bank, a better one. Get started in minutes at tmobilemoney.com.
So our broader banking as a service strategy, which today is best exemplified through our higher education strategy and through our telecom strategy with T-Mobile, is much broader. We feel that we are living in a very customer-centric era where companies are continuously looking at how do you continue to attract, engage, and retain customers. And we truly believe that financial services can be one part of that broader strategy to achieve more customer engagement and retention. And so we typically are looking at verticals and companies where there's strong brand equity, they have access to millions of customers, and there's usually some sort of transactional relationship between the customers and that business so that we can interject the bank account into that process to make it more seamless and also to create a very customized perks and rewards driven experience for that specific business use case in the customer. And it's really a win-win where the company gets to, build brand equity, but also gets access to customer data, an additional revenue stream, and their customers are typically those that are low middle income, underserved millennials when it comes to banking, and they have a very compelling banking offering that they didn't have access to before. And so I just wanted to end, since we have a few minutes, with a broader just understanding of what's happening in the industry. So we're seeing massive consolidation when it comes to banks. The reality is that the top 1% of banks have 50% of the assets, 99.9% of the banks, the rest of the banks have 50% of the assets. And so, my thought is that the top banks aren't going anywhere. They're well positioned to innovate and to be able to leverage their scale and to continue to invest in technology. And it's really those that are underneath them, the 99.9% of banks. What are they going to do? How are they going to separate themselves? How are they going to create a niche for themselves so that they can continue to acquire customers over the long term? And that is really the question to be answered. There was a Forrester researcher that did a short piece on looking at the Apple Marcus relationship as well as the T-Mobile Bank Mobile relationship as well. And it was really about how there's a new delivery channel of acquisition that's based on building an emotional connection with the customer and being very focused on product design. And short one minute.
Well, I would say yes. The reason is because the worst fears of many banks is now coming true. That fear that large telcos and non-bank brands are going to enter into the banking arena. So we've got Apple announcing their foray into banking and their partnership with Goldman Sachs. We've got T-Mobile with T-Mobile Money entering here in the US. And both those firms have very strong, well-known brands. They have a very large existing customer base, and customers have a strong emotional connection to that brand. And that's the key reason why banks should be worried, because banks don't usually have a strong emotional connection to their customers. In fact, our customer experience index research tells us that banks don't do so well on emotion when it comes to customer experience. And what we do know from our research is that emotion is the biggest driver of loyalty. The other reason why banks need to be worried is they're really going to have to lift their game. Both Apple and T-Mobile are changing product.
Sorry guys, I'm going to cut that short because I'm running out of time. But I just wanted to end with the fact that there are huge opportunities that exist for banks today. But the reality is if we continue to grow in the same ways that we did in the last 5 to 10 years, you're going to be in trouble. But every threat also presents an opportunity. And I think that if banks continue to focus on, not just money transactions, but money management and financial advice, how we can create more of an open banking platform with APIs and create financial marketplaces that really provide value additive services to customers. Taking part in the Internet of Things, everything is going to become a wallet soon, and to be able to play in that space. Continuing to have that human touch, even though we're becoming so tech-centric with conversational AI, etc. And then lastly, what we just heard from Forrester and what we're trying to propose is there are a lot of brands out there that can benefit from financial services, and we can leverage their emotional connection, and banks can continue to grow and be a back-end player in that space. So I will end with this quote that I love: you must disrupt yourself or someone else will. It's a good reminder for all of us, so thank you so much.